The 100-week moving average of Bitcoin is trending down, most significant in its history. This is what you expect in an asset that's maturing. And the recent bounce was near that average. So trend is heading lower and the Fed's still hiking. There's bad things going on for Bitcoin in the macro. And so I think it's going to take time. We got to get through this. And maybe I'll be wrong about this great reset. If that's the case, then maybe Bitcoin will be a leading indicator on the way up. Now, just remember the thing, Bitcoin trades about 3 to 4 times the volatility of gold and the stock market. So it should be a leading indicator.
Mike McGlone, senior macro strategist at Bloomberg Intelligence, believes that the time for big Bitcoin pumps is over. His graphic analysis shows the steep rise in the Fed's interest rate over the last year or so, with Bitcoin's 100-week moving average witnessing a downtrend. Bitcoin volatility has declined immensely in the last few years, as the Bitcoin price action shows. Bloomberg senior macro strategist Mike McGlone says Bitcoin volatility has more room to decline, making the top crypto's relative risk to fall continuously. However, it is still higher when compared to the volatility of conventional store of value. Bitcoin has been hovering around the $26,000 level since breaking below it suddenly late last week and posted its worst week since May. On Wednesday, Bitcoin rose more than 2% to $26,517. Currently, it is again trading at $25,993. While there are many theories on why the Bitcoin price crashed, two stand out: coiling volatility and forced liquidations. Just before the 2023 rally formed a top at $31,500, Bitcoin was already trading in a tight range. As per McGlone's analysis, it becomes apparent that the Bitcoin market has gravitated towards the range of approximately 10,000 units. This particular value corresponds to the market state before undergoing its most significant surge in liquidity, ultimately culminating in a peak at the impressive level of 69,000 units. The macro factors, along with a weak technical chart structure, are putting pressure on Bitcoin price. The Federal Reserve's plan to continue rate hikes, which caused Bitcoin price to tumble recently. In the interview, McGlone confidently stated that Bitcoin holds great significance and it could realistically reach a value of 200,000 units in the future. Let's direct our attention towards the few clips from interview.
Basically, around 10,000 in Bitcoin, around that level is where the market was before this biggest pump of liquidity ever. It went to 69, and now we're back in still, I think, a bear market. Crude oil was right around $60, 57. Now it's gone within 10% of that level. So there's the autocorrelation to crude oil. It was at that level right before the big pump in liquidity, and it's back down. The most significant one of that that's going to matter the most is, I think people need to never forget in markets from where they're from. Where did the market come from before this event happened? So normal reversion in a normal recession for the S&P 500 is probably around 3,000, particularly if we tack on what we did in terms of pumping liquidity in the system. The 50-week average right before COVID, 2019, at the end of the year was around just below 3,000. So I've heard pushback is people say, oh, it's so different in Bitcoin. The problem with Bitcoin is it's a baby. It still is the highest volatility in the space. Yes, I see all the big picture. I still agree with it. Decline in supply. It's going to become global digital gold. But the problem right now is it's the best performing asset in the history of the world. And what really created this asset to perform so well? Digital gold in a zero interest rate environment? Yeah, okay, that works. We're going digital. Now that was what pumped Bitcoin to the best. It's still, if it drops to 10,000, it's still probably the best performing asset ever. So that to me is a problem. In a shorter term, that's the macro. If we have this downturn, you just take money away from everybody, which is kind of a rule in bear markets, Bitcoin will suffer. The key point is we need to see at some point it to start showing divergent strength, where it trades more like treasury bonds and gold in a deflationary environment. And it hasn't been doing that. It peaked basically at the end of Q1, got to around 31,000 on this hopium and ETFs, and it's dropped back down around 25, around 26 now. It's showing divergent weakness to the stock market going up. I need to at least see signs of as a trader, as an investor, you need to see signs of the oomph. And then you look at overall all the other altcoins. I mean, a lot of them could go to zero with what's happening with regulation. I mean, are they not securities? Why not? I mean, so this is what I see for Bitcoin. It's the number one crypto that matters. I think eventually it's going to get 200,000. But if we get the global economic reset, I think we get a normal deflationary recession, housing coming back down, stock market coming back down, similar to 2008, but this is actually in some cases worse because we're still taking liquidity from system. Bitcoin is a great leading indicator, and that's my point. Lately, it's been kind of leading the way down. It got up to around 31,000, and it's been tilting back lower. So I'm looking at it as a leading indicator for most risk assets.
Coupled with macroeconomic conditions and range-bound movement, the volatility of Bitcoin hit all-time lows. Over its 13-year lifespan, Bitcoin has embarked on many low volatile phases, but each time Bitcoin range breached, it triggered an explosive move. According to data firm Keiko, liquidity in the Bitcoin market has been dropping for some time now on major exchanges like Binance and Coinbase. This means that when big holders want to shift their holdings, the rest of the market will feel it. According to McGlone, Bitcoin's volatility continues to drop against that of gold and has more room to decline than most traditional assets. Bitcoin's volatility drop is also causing crypto's relative risk to decline, making it less risky. Let's direct our attention towards the few clips from interview.
And here's the point about Bitcoin. The price right now is about the same for 3 years. Volatility is 50%. That's 2 to 3 times almost every other risk asset. And it's still kind of a toy for a lot of these investors who might be going to the ETFs. If things start changing where they realize this rally we've had for the last 14 years is going away and reverting basically what the Fed is planning, then it might take a little while for Bitcoin to catch that bridge. So here's a simple fact. The point I like to point out is Bitcoin was hovering around 10,000 before the big pump in liquidity. I know things have changed. I know on-chain metrics have increased, but there's a potential we can easily get back there if we get the reset I think we're going to.
Last time we spoke, you said $100,000 Bitcoin by 2025. That's still a pretty big pump, if that is still your view.
So this is 2023. That's maybe pushed back a little bit. Based on supply demand, I like that scenario, still kind of going there, but it depends on how that was before the facts have changed. The lessons of Keynes. The facts changed when we had this big pump of liquidity that's dumping. That to me is the biggest thing about Bitcoin. And the best way to describe it is it's coming to mainstream. There's one thing I'll point out. One thing I did get right was this launch of the futures. It's just this tremendous. It squashed the volatility because it's a tremendous risk arbitrage cash and carry trade. It was just so free for a little while. The money was too easy to be able to buy Bitcoin, sell futures, lock in, and just trade around it. That's happening a little bit now in GBTC with that huge discount and people doing that trade. It's getting arbed out, but that's the whole thing about institutions getting into space now, Michelle. It's the days of Bitcoin or the years of it going up 100 to 200% are done. It happens in infancy. Now I think with volatility, it's going to trade more like gold and stocks and treasury bonds, and that's the trajectory. Volatility right now is 50%. It's 2 to 3x the stock market. It was almost 10x just a few years ago. It's getting squashed, that volatility, which means it's not going to have that outperformance. And the lesson I like to learn is Bitcoin. It's a lesson that one of my favorite technical mantras is it's going to go up because it went up, or it's going to go down because it went down. That has been the case in Bitcoin and the stock market for the last at least decade. And there was a good reason for it: liquidity. The liquidity is still negative at the moment. And this is something that hasn't happened in my lifetime. We've seen this much negative liquidity, despite things like leading indicators showing we're going to have a recession. Now, Bitcoin is still a risk asset. It's gone up a lot. And I can see it getting back towards that mean around 10,000. Long term, I think it's one of those things that's supposed to be a buy and hold. But for traders who bought around 31, they might get stopped around 15, make a new low, maybe a double bottom, and then maybe we'll see where it goes. But again, this is the part of the macro it fits in. It's just the leading indicator. If it's such a good leading indicator, why is it doing so poorly in the last few months?
Okay.
I think it's because, to me, it's indicating the tilt I'm expecting, and that's towards this great reset.
After several months of consolidating around the $30,000 level with historically low realized and implied volatility in the Bitcoin market, the price finally awakened, bringing about the biggest liquidation event Bitcoin has seen in years. However, some people still think that the market could experience a big reset, and as a result, Bitcoin might go back to reaching its highest values ever. That wraps up our conversation for today. Feel free to share your thoughts in the comments section below. If you found this information valuable, give it a thumbs up and consider subscribing to our channel to stay informed with the latest news and videos. Thanks for joining us.